Welcome back to 7-Minute Options. On Tuesday, November 10th, just adjusting my Palantir and FUBO covered strangles. Both Palantir and FUBO are now through earnings, and I only have 9 days left in the expiration in those positions, so I'm going to be rolling them today. So Palantir is trading for around $22.90 right now. There's only about 21 bucks left of extrinsic value in this position, so it's a good time to roll it out. So what happens if I roll this existing strangle out into December? I only pick up 63 in credit, which is pretty good, but I can adjust because right now this $30 call is at a 9 delta. I can move that to the 23 delta. And so this would turn it into a 25.26 strangle. The put would still be in the money. I would pick up $92 in credit. If I try to move the put down to the 24, I only get 18 bucks in credit. So I feel like I'm happy with the 91 in credit. I will continue to leave the put 2-3 bucks in the money. I expect a bit of a rebound at some point, but that's fine. I'll take the $90 in credit. I will leave that on for a few minutes. Now let's take a look at FUBO. When did FUBO? Yeah, so FUBO is through earnings now. Are they through earnings now? Yes, they are. Interestingly enough, we still have $123 left of extrinsic value in this position, which is surprising. This was a 28.33 covered strangle. FUBO is down 6 bucks on earnings. We're now at 26, so it's going to be a similar move to what we had in Palantir. So why do we do that? Roll the expirations. Let's look at December. If I take the same position, I pick up 200 in credit. If I roll so the call is already at a 27 delta. I feel like I can move it to the edge of the expected move. Right now it's at 26 bucks. Let's move the FUBO to the 31 call. And I pick up 240, 220 in credit. The put, I feel like I'm okay with the put being at 28. I mean, right now the stock is trading for 26. I just need a bit of a rebound. And it's a nice wide strangle here at 28.32. I pick up 220 in credit. So let's do that. I'm okay with doing that. And that fills for 220 credit. Perfect. I'll take it all day long. All right. And that's it. I just need Palantir to fill. Okay, maybe I'll lower it down to 90. Maybe encourage to get that one over the line. Come on. All right, so we talked about Palantir, FUBO. Nothing else is expiring anytime soon except my VIX hedge. IWM finally pulling back almost at my long call. That's great news. If it continues to pull back, then if it pulls back to the 233, 234 range, I will be able to roll it out, which is nice. Pick up some more credit there. SPY, my long call is at 461. We're still up at 465. So even though there's a lot of red on the board today, IWM and SPY haven't come down that much yet. Yeah, so SPY is still very much hovering at the top there. And IWM, how's that looking today? Okay, so that's definitely pulling back, which is good news. Okay, that's what we got there. Couple of positions here are coming close to closing. So BITO, the Bitcoin futures ETF, we sold it for 105. Right now it's trading for 60. So right now my GTC order is to buy it back at 53. So Bitcoin has been on a bit of a run the last few days. So this one is really moving in our favor. This was just a put credit spread. So that one is looking really good. Hopefully that can close in the next few days. And EWZ, this one. Yeah, let's look at EWZ. I think we're almost in the clear on this one. Look at the chains here, just the open ones. So we have collected $303 in credit so far after opening it and rolling it 2-3 times. Right now I can buy it back for 313, so I'm still 13 bucks in the hole. Actually 311 now, so okay, 9 bucks, 8 bucks in the hole. It's moving toward me, but I can't close out for a scratch, so I might have to leave this on for a few more days. But it'd be nice, yeah, as soon as that moves back in our favor, I might be able to close it out for a scratch, maybe like a $5 gain or something. Get that off the board, get my buying power back. One thing that I'm keeping an eye on is I'm big on the flying car segment. I think at some point one of these companies will actually have a flying car product. So Joby here is my long position in Joby. And there's another company that's on the market now. It's ACHR, Archer Aviation, just like Joby. This one is a flying car company based out of the Bay Area here, startup. Very similar to Joby. I think they went on the market via a SPAC. They don't have a product yet. They don't have revenues yet, but it's trading for $6. So yeah, you can see, yeah, there's the magic $10 line right there, which is when it was a SPAC, and then ever since it basically became its own company, I mean, it's been hemorrhaging money because it doesn't have a product. It has a lot of expenses. It's got staff. It's got people. I imagine they're designing and building stuff. But this might be an interesting play. A couple of different ways to play it. I haven't thought much about it. November 11th. Okay, so they have earnings coming up, so I'm not going to touch it until earnings. But if I go out to like 436 days, or let's say 800 days away, I can sell a $5 put, collect 180 in credit, and use that to, say, finance a $7 call, and I pay only $45, and I own a $7 call. Interesting. Yeah, or I can even put on a $10 call 800 days away and pick up $5 in credit, $449 of buying power, $274 of buying power. Yeah. Okay, I'm going to think about this one, but that's what I'm looking to do, is either sell a long-term put and use that to finance a call or some other bullish position. Another way I'm thinking about this is, let's say if I buy 2 calls and there we go, 2 calls, and I sell 1 put that's closer to the at the money. Yeah, so in theory, that allows me to control 100 shares. So I would control 100 shares. I would only pay $390. Now I'm trying to put a zebra on, but it's not really a zero extrinsic value. There's minus $188 of extrinsic value in there. But if I look at the analysis table here, this would look a lot like 100 shares, right? So as soon as the stock price starts going up, there isn't a whole lot of extrinsic value in there. So this position would just follow the price of the stock. So if this thing opens up at $20 one morning, this position would be very similar, almost the same as owning 100 shares of stock. And if I buy 100 shares of stock, it would cost me $600, but the zebra to put it on only cost me $390. So that's what I'm looking at, either selling a long-term put and using that to finance a call, or just buying this outright and see where it goes, buying a zebra. Both of them are cheaper than buying 100 shares. So that's what I'm kind of keeping an eye on, but I'm just going to wait till earnings, and I'm going to wait till I have more buying power. But yeah, that's it in a nutshell. Thanks.